Guys, welcome back to the Layah Heilpern show. Now, you have been flooding my DMs, and so we are here. Luke Belmar, part two. And today, we are talking everything crypto. We have a massive bull run coming. This is going to be my second bull run. It's going to be Luke's third bull run. You need to know what to do and how to navigate through it. So let's get Luke. Luke, welcome to the show. How are you?
Thanks for having me. It's good to see you.
It's great to see you. We have this crazy bull run coming. We know how amazing you did in the last bull run, and we need to understand how to navigate through it, what's going on. So, right now, the biggest topic is the Bitcoin spot ETF. And I've seen a lot of your tweets. You're talking about how there's a lot going on behind the scenes. We've got BlackRock, VanEck, Fidelity. There's the Grayscale Bitcoin Trust. They're trying to convert that into an ETF. There's so much happening. Is it getting approved? Is it not getting approved? So I want to get your take. Firstly, let's start with what is going on behind the scenes.
They often say, don't do what billionaires say, do what billionaires do. So all you have to do is evaluate what are the billionaires that support crypto initiatives like Bitcoin. And they are the billionaires that run the world. You look at Peter Thiel, you look at Elon Musk, you look at the Winklevoss twins, you look at Chamath. There are a plethora of individuals, Mark Cuban, Tim Draper, that support Bitcoin. So when you have these titans with billions of dollars in liquidity, they run narratives, especially the internet narratives. So when you compile all the PayPal mafia individuals into one room and you compile all of their tweets and all you have to do is go on their page and type Bitcoin or BTC, you'll begin to realize that a lot of these early ideas of Bitcoin, crypto emerged in Silicon Valley. A lot of the love for crypto actually started there. So before we even talk about this idea of, oh, there's an ETF that's about to get approved and people are hyping this shit, this ETF's been approved for years.
What do you mean?
The Bitcoin ETF, so Fidelity's been mining Bitcoin since 2015.
Right.
So when you have a company that has trillions of assets under management, indirectly and directly mining Bitcoin, it tells you that they understand what is happening. So, what you do is you prepare yourself ahead of time for future interactions. So, when you control the markets and you get into lobbying and you get into how politicians are persuaded to push policy, not in my famous words, but in the famous words of one of the BlackRock employees, with 10 grand, you can buy a senator.
Mm-hmm.
So with 10 grand, you can buy a senator. With 10 grand, you can push a policy. So all the policy that had to be pushed was let's introduce Bitcoin as a traded potential fund through the NASDAQ. And it's not the first time that it's happened. We had the futures ETFs that were approved. We had ETFs approved in other countries. It was just a matter of time. All that had to happen was the T's needed to be crossed, the I's needed to be dotted, and BlackRock needed to sign the motherfucking paper. So when BlackRock runs the world and BlackRock says, we just filed for a Bitcoin application at the bottom of Bitcoin,
Mm-hmm.
what are you going to do? Fight them? What are they doing? Lying to you? No, they have a reputation to maintain. If they're going to actually go and pull off an ETF, it's because they have customers that want that product. But most people are like, well, why is this crazy? Why is this a good thing? Because a lot of individuals that wouldn't get exposed to crypto, that wouldn't buy crypto, that don't care about whether Bitcoin is the currency of the future, all they want is profit.
Mm-hmm.
They want exposure to this, but not through decentralized finance. They want it through a product that they understand. So BlackRock, as a financial institution that offers what? Services and products, they just said, let's make Bitcoin a product that we can sell. And that's exactly what they did.
But here's the confusing thing. Everybody's so excited about this. And we spoke earlier and you said, you're not you are a little bit of a Bitcoin maxi, or maybe you are, you're not, you're sort of towing that line. But is this going to be a good thing for Bitcoin or a bad thing? Obviously, it's good for Bitcoin price, but from my perspective, BlackRock and these other like major asset managers buying up this much Bitcoin seems like they're going to control a huge amount of the supply. That concerns me. Does it concern you at all?
It doesn't concern me. The reason it doesn't concern me is because Bitcoin has no owner.
Right.
And what I mean by Bitcoin has no owner is that it has no one centralized party that dictates the outcome of Bitcoin. Now, even though there's people that hold a lot of Bitcoin, that doesn't mean that they control Bitcoin. You had, for example, the richest guy in Bitcoin is a Chinese man known as Jihan Wu. He probably has over 1 million tokens. He probably has barely less tokens than Satoshi, if not more.
Mm-hmm.
He has one of the biggest mining companies in crypto, and the ASIC mining machines, that's his company.
Okay.
So this guy was mining Bitcoin before Bitcoin mining was cool. He put out an article recently saying, hey, during the ETF approval, we think the market may go down. So all I'm doing is listening to other individuals and asking myself, what is the currency that I am willing to bet on? So it's not whether it's bullish, whether it's good, whether it's bad. It's I have to park my monetary value somewhere. Where do I park it? I need to park it in a vehicle that allows me to do what? Maintain my purchasing power and maintain the energy input that I initially inserted to acquire that money. The problem that we face is that a lot of people lose their ability to buy things. That's why they have to go into the markets because their assets depreciate.
Mm-hmm.
So people begin to do what? Speculate. And in speculation, you create bubbles. But what happens when speculation doesn't exist? When don't you have to have speculation? When you have no inflation, because the currency that you hold is stably appreciating. So we need to find appreciating assets. And we only correlate it to what it depreciates or appreciates against. All you have to do is compare how many US dollars were printed over the last 10 years, and you'll realize that there is no power in holding this currency. So what is the counterpart? Maybe Bitcoin is the counterpart. Maybe it's something else. But the question is, am I willing to put in the hours and commit to detangling myself from the US dollar psyop to find a better solution? I don't know if Bitcoin is a good thing or Bitcoin is a bad thing in the sense of ETF approval. I'm just right now not even looking at the ETF as an individual event, as a singularity event. Remember, I've been in the space for 8 years. So under the premise that I've been in the space for 8 years, I've seen Bitcoin at $560. I've seen Bitcoin at 1,000. I saw Bitcoin at 20, then back down at 3,500. I saw ETH at 1,500. I saw ETH at 80.
Yeah.
You know what I mean? I've seen this thing go all the way up, all the way down. But Bitcoin always makes higher lows.
A lot of people are calling this event a buy the rumor, sell the news event. What's your take? How do you
Doesn't
think
matter. It doesn't matter. It depends on the individual that you are.
Right.
So if you are somebody that buys and saves in Bitcoin, it's irrelevant because you are not counting it at a dollar value. You're counting it as your ability to buy Bitcoin. If you want to trade the market, the last thing you want to be doing is trading during the ETF. Because you don't know what's going to happen. And what you need to understand is that exchanges have an understanding of order flows. They know what buy orders are in. They know what sell orders are in. They understand how thin the books are, and they can easily manipulate in and out of the market. You saw, well, this company that put out a report. I think it was called, is it Matrix Pool?
Yeah. I saw
That's owned by Jihan Wu. So now you understand the influence that's actually attached to that article.
Yeah.
It's the guy that fucking runs crypto.
And nobody had heard of Matrix Pool, which was
Well,
very
the
interesting.
people that don't know actually a lot about crypto.
Yeah.
It's the people that are in the crypto space that don't know about crypto.
Yeah.
And that's the entire point, is a lot of people are in crypto not because of crypto. And we talked about this. They're in it because of money. So if you have Bitcoin under the premise of I save in Bitcoin, don't worry about the ETF. If you're a trader and you want to capitalize on the markets, you need to be a person that understands that the markets sell into the liquidity. So when is the liquidity going to come? Always during the news. Do you want to be trading that event? No, because who are you trading up against? Bots, algorithms, AI, trading desks. You're fucked. With what? Your $1,000 trade on 5x leverage because that's going to be your moonshot? No. What you need to do is wait till everything settles and understand the macro trend. And where's the macro trend? The macro trend is that we are in a fucking bull run, sister. We're in a big ass bull run. And this bull run is what I believe to be the biggest super cycle crypto has ever seen. And the reason isn't because Bitcoin is more special than it used to be. First of all, Bitcoin is more indestructible than it used to be. It's not more special. Bitcoin is just Bitcoin. But crypto has become a very special space. Why? Because the path of least resistance is finally here. The first bull run that I participated in, and if you wanted to be part of an ICO, you would fund your MetaMask wallet with Ethereum, you would send it to an ICO address, and they would send you tokens back. It was impossible to scale. You can't do it, run an enterprise that way, but that was the way of raising funds. The next bull run, we had the Binance Smart Chain, right? And we've talked about this, how I bought 1% of the PancakeSwap supply because I saw DeFi growing. And I was like, whoa, these guys have built upon DeFi and they've built a platform, but it was still kind of raw. You would still have to connect multiple chains and it would get messy. And then you would have your transactions, your gas transactions freeze. It wasn't a normie experience. Today, all you have to do is three things. Open up your iPhone. If you want to get involved in crypto in 2024, all you have to do is three simple steps. One, open up your app store, download the Phantom wallet, click the Jupiter exchange, and have your wallet funded with some crypto. And in 10 minutes, you can be trading crypto. You can be buying crypto with no KYC, no centralization from any part of the world as long as you have access to the internet. That is the path of least resistance to the normies, and it's finally here. That is what's going to cause the crypto super cycle. 100% that is what will cause the crypto super cycle.
Okay, so when you say super cycle, explain what that looks like. Because
Massive
a lot of
adoption.
people, right, but right now the cycles tend to be 4-year cycles. We have the halving,
But it's
and then we have the 18, then we have a bull market for
the
18
Bitcoin
months.
cycle started in 2009. The moment Bitcoin started.
So you don't,
15
so you
years
don't
ago.
believe in the 4-year cycles.
Or you can believe in the cycle of 100 years.
But when you look at the market, you can see that it's dictated by the Bitcoin halving. 6 months later, we tend to see the bull run start. It goes on for about 18 months. Then we crash for like 2.5 years, 3 years.
Yes, at a micro cycle, yes.
Right.
But at a macro cycle, what are you looking at? What is your dollar worth right now?
In comparison to what?
Exactly.
Okay, so what do you mean?
So what is your dollar worth? What are you comparing it to? You have
I'm
nothing.
comparing it
You have nothing to compare it to.
Right.
That's where the theft is. The fact that you have nothing
Of
to
course,
compare.
$1 is always $1. Yeah, yeah.
But what is $1 worth?
Less and less every day.
Why?
Inflation, they're printing more.
Why are they printing more money?
Debt.
No. Think. Why are they printing more money? The answer is more simple than you think.
I don't understand.
To fuck you.
Oh, right. Okay, I got it. Okay. I'm like, what do you mean?
That's it.
Right.
Because the
So
fiat,
that-
because
destruction by
fiat
design.
by nature was created to steal.
Right.
So fiat by inception, when you sit down in a think tank, you can sit down and be like, how can I help humanity? Bitcoin. How can I introduce sovereignty and complete authenticity and transparency of the ledger? Bitcoin. Counterpart. How can I fuck everybody? Centralized, closed, manipulated system with tailored books. That's what everybody lives in today. So if you want to be outside of the system and you don't want to be fucked by default, you need to be able to find vehicles that you can counter the dollar to. So what are you comparing the dollar to? You need to find that comparison. What have I compared it to? A few things that are of high value today. The attention currency. So I exchange my dollars for attention. I will have any day of the week money spent on distribution or content creation over holding dollars. Why? Because influence matters more than dollars. I'll hold Bitcoin over holding dollars. I'll hold luxury watches over holding dollars. Why? It's not that I can't utilize dollars, it's that they're worth nothing. So why would I have that? Because the moment you own dollars, you are placing a bet on them. When you hold the dollar, you're long on the dollar. It's like holding Bitcoin, but you're long on that. And you think it's pegged 1-to-1 when really it's being printed out of thin air and fucking you left, right, and center, because that's what it was created to do.
It's actually insane to think that people sat down, went to an island somewhere, and decided, that they wanted to create something to fuck the entire.
The thing is, it didn't start in Jekyll Island when they passed the Federal Reserve Act of 1913. You can take the concept of usury and adding interest in debt and the debasement of currency all the way back to Rome. You can take it all the way back to Rome. You can take it all the way back to the bartering days. So we enter a society where people say, okay, we will cave to centralization under the premise of convenience. We talked about
Yeah.
this, right? So people are like, I won't be part of the system. I'll comply. I'll KYC. I'll submit my ID. I'll go try and see if I can get a bank account and not get it shut down when I try to buy some crypto and follow the rules because they have no other choice. But what happens when a competitor with a path of least resistance comes that doesn't have all the X, Y, and Z baggage attached to it? They become a competitor. So now you have the state, which the state and banking are basically one, competing with the free market.
Mm-hmm.
And which one wins? The free market always wins. So the question is the currency that you hold, it's either backing the government, the banks, the monopoly, or sovereignty and the market. You have to pick one or the other, but it can't be both.
And I remember you telling me that you had buy orders, $10,000 of buy orders for Ethereum at around $80 to $100. So you've been buying constantly. How are you preparing yourself? I know you said that we're already in a bull market, but how are you preparing yourself for the next 18 months? Have you got any buy orders in? What are you holding? How much Bitcoin are you holding? If you can tell us how much ETH are you holding? What does your portfolio look like right now? Just before we hear what Luke has to say, I want to let you know about my free and exclusive community on Telegram. Inside, we talk about how to build a brand, how to network better with people, how to make money online, and of course, we talk about crypto. Remember, guys, it is completely free, so I'm going to leave the link for you in the description below, so join if you're interested. Now, let's get back to Luke.
So my 2023 play was I rotated into tech stocks. So there's a different types of plays that you can do with regards to your money. You can have creation plays of making money. You can have multiplication plays for your money, and you can have preservation plays for your money. So preserving my capital. So I sold my Bitcoin anywhere from 55,000 all the way to 48,000, and obviously you sell on the way down. And I rotated all my money into tech stocks: Meta, Microsoft, Shopify, PayPal, for the very simple purpose that I needed to hold legacy stocks long term. So when Facebook enters 2017 prices with 2020 revenue, I'm like, this is a really good deal. So I made a public call that I was allocating 10% of my net worth, which is millions of dollars, to buy Meta stock. People can pull it up. I think it was a couple days from the bottom. And I still, well, I re-entered that position recently, but it's probably my largest holding right now. And the reason I rotated from Bitcoin into Meta was simply because it was an undervalued legacy play. Same thing with Shopify. All you have to do is look at their reporting and understand that they're a absolutely behemoth with no competitor, and understanding that eventually they're going to become a cash net positive business. Who doesn't use Shopify? We all do. So betting on undervalued, high performing stocks. PayPal, cash flow positive business. So you begin to look at businesses that are like really, really undervalued. And yeah, they may not do a 20x, but that's a preservation play. In crypto, is, are all these random chains worth billions of dollars?
No.
Truly, do they have billions of dollars worth of product market fit and customers? No. So the goal is I can multiply my money in a bull run, but then I need to be able to move it into generational plays. So for example, I hold Shopify stock. I made a $4 million purchase of Microsoft stock the same day that they announced a $10 billion purchase or $10 billion loan or agreement with OpenAI.
Mm-hmm.
So I purchased millions of dollars worth of Microsoft at that moment. And that's probably a stock position that I'm going to hand off to my kids. Truly, because it's a multi-generational play. And once again, now it's at all-time highs. So my rotation back into crypto came the moment Credit Suisse and SVB
Mm-hmm.
defaulted.
Oh,
That's
perfect
when,
timing.
well, that's when the bull market started, because trillions of dollars were printed to bail the banks, just like '08. But this time, you had Ukraine war on the news, you had a ton of different narratives happening. So the printing of money was under the radar, but it still took place. So when you have $2 trillion that nobody was talking about printed, what happens? The markets pump. So the bottom of the bear market was the tanking of SVB, the bank. think there was another bank, I forget what it was called, and Credit Suisse.
Yeah.
The bailing out of those banks was the beginning of the bull run. Now, we had a micro kind of bear market throughout 2023 in crypto, but we didn't have it in the stock market. The stock market pumped. The AI narrative was strong.
Yeah.
And as soon in June or July, as soon as the Bitcoin ETF BlackRock application was submitted, I rotated fully back into crypto. Why? Why wouldn't I bet on the biggest asset manager in the world? Simultaneously, I made a $2 million purchase of BlackRock stock. Why? Do I like BlackRock? No. I don't give a fuck. I'm still going to make money off of the fact that BlackRock will have their BTC ETF approved and their stock is going to fucking pump.
Out of interest, how quickly do you think it'll be approved? We want to get this interview out pretty soon.
I
So
think I think I think the Bitcoin ETF becomes approved in January 2024, and if it doesn't, within the first quarter, most definitely. Most definitely. Now, I've heard from sources inside of a couple of these companies that are running these ETFs that at this point is just picking who they want first. And it looks like they're going to probably approve a ton of people at the same time because they can't pick, which is fucking crazy to think about.
is there a reason they would pick one asset manager, one institution over another?
So not necessarily, but it's a battle for assets under management at this
Yes.
point. So it's figuring out who gets approved first and who can get as much liquidity into their ETF because that ETF will most likely dwindle any other ETF. You're not going to have 20 top performing Bitcoin ETFs. You won't. You'll have a few dominant Bitcoin ETFs that are priced in properly. The tokenomics, and instead of it saying like $40,000 for the ETF price point, maybe it's $4. So $4 is more digestible, and you see the $4 price go up, more people are going to buy into that. So whoever can tap into public funds with their ETF is going to fucking skyrocket. And whoever can get first and secure funds, which are going to be hard to move to another asset manager, I think those are going to be the leaders long term. But I don't think all the ETFs are going to have massive liquidity. I just think some of the more prolific ones will.
And you mentioned that AI has been huge this year. And I remember you said that you first heard about CZ talking about pancake swap on Clubhouse. And that's how you knew that, pancake swap was going to be huge. You ended up buying 1% of the total supply of cake. So what do you think is going to be huge in the next bull run? Obviously, we've seen DeFi, we've seen the metaverse, AI. What's the next big thing that people need to look at?
In 2017, I was sitting with my brother and we made a massive purchase of Decentraland at 2 cents. It pumped to $6. We knew that the metaverse meta was going to happen. I didn't think it was going to be as explosive as it actually was. But this bull run, the narratives are very simple. Anything that optimizes the EVM or the Ethereum virtual machine and empowers people on top of that platform to trade with low gas fees, high frequency trading, and being able to have more of a Solana type feeling are going to be the products that win in the Ethereum ecosystem. These are all considered L1s. You have different companies that have been absolutely crushing. You have ZK Zinc, you have Layer 0, you have Immutable X, you have new projects that are coming out, Monad, amongst others. Now, where's the narrative in 2024 bull run? There's a few narratives. But before we talk about narratives, let's talk about the stages of crypto. We were talking earlier about crypto in stages. Crypto has a 5-stage lifespan. The first lifespan of crypto takes place at your universities, at your research facilities, at your MITs, at your Stanfords, where research papers, white papers, and thesis regarding a potential product or endeavor are created. Next, you have the foundations or the big organizations or the think tanks that fund this research. So Bitcoin, for example, was developed probably 7 to 5 years before it was even put out. That's how long it took to develop this incredible product. All these products that are coming out now in crypto, they need to be funded. These professors, these students, they don't have money. They need grants, scholarships. Who's paying for that? People that are going to own a percentage. What is a good example of this? Did you know that Peter Thiel actually invested into the Ethereum Foundation prior to Ethereum becoming a relevant company? Most people wouldn't know that. So you have these guys that are running these think tanks. So narrative one, beginning of crypto, is you have the nerds. The second one is you have the people that anticipate narratives or create narratives. Then you have your key opinion leaders. You'll have your CZs, your potentially now your Michael Saylors. You had snakes come in like Sam Bankman-Fried that acted like key opinion leaders, but they weren't. Then you have the major influencers. These are your Twitter accounts, your YouTubers, and then finally you have your normies. Crypto, every single one of them that is a real crypto, not all these fucking bullshit, they go through all these stages. The question is, where are you able to catch it in the stage? And depending on where you catch it on the stage is the return that you're going to get, but also the risk that you're assuming. So if I'm buying Dogecoin at 20 cents on Robinhood when it's the peak of the market and the taxi driver's buying it, and no offense to the taxi driver, but when it comes to financial literacy, he's at the bottom of the totem pole. The narrative has already been constructed. It's been created for 4 or 5 years. The main funds and foundations have already invested into it. The key opinion leaders already have their bags. The influencers have already shilled it to you. You're the exit liquidity. So your job isn't to figure out what position are you holding, what token allocations do you have, but how can you move from this side of complete ignorance? You don't have to move all the way to MIT, but the closer you can move to the source of information,
Right.
the higher chance you have for returns, but it also can be a little bit riskier in crypto because it operates more of like a venture capital or seed investment. So today, my crypto opportunities come more so from what I like to call gem hunting and hunting for gems and hunting for opportunities as opposed to observing the open market like everybody else. If I'm observing and trading just Bitcoin, I'm going to be limited to the performance of Bitcoin. So Bitcoin right now is sitting at almost $1 trillion market cap. Great. Let's say it goes to $10 trillion market cap in the next 5 to 10 years. It's potential. It has potential to it, especially if they continue printing dollars. But do I want to sit on a 5x or a 10x on Bitcoin? Or do I want to go create my wealth and multiply my wealth in narratives and then dump my wealth into Bitcoin so that I can keep my purchasing power? So I'm focused on the narratives that are happening right now. Bitcoin is a big narrative. You have the BRC chain, you have the ordinals, you have people inscribing shit on Bitcoin. So there are narratives happening here. But I think the normies, the people that are at the new entry stage of this, what we like to call information and access super cycle, are going to use the paths and tools of least resistance that are readily accessible to them on their phones that just happen to be, in this case, Solana and AVAX and things of this nature. Now, I'll be the first one to confess. When the soy boy fat fuck that stole my money and everybody else's money destroyed the crypto space, I thought Solana was dead, but I was mistaken. And I'm not often mistaken, but sometimes I make some mistakes. And I was mistaken at the fact, not that whether it's a good chain or not a good chain, is that users will go to the best developed product with the path of least resistance, with the best UI UX, where they can do what? Where they can do what? Go into crypto and do exactly what they want to do, which is what? Be a fucking degenerate.
Yeah. Buy, sell, gamble.
So Solana, per the founder, was created specifically to cater to that. Hence why you've seen it become popular again. So I think there's a big narrative there. I think that there's a big narrative in
A bigger narrative with Solana and convenience over Bitcoin ordinals and everything that's being built on Bitcoin.
a big push towards the utilization of tools that have the path of least resistance. And today it just happens to be that Phantom was initially built on Solana. Solana runs like a fucking machine. And right now you have different exchanges, decentralized exchanges like Jupiter, that in 3 to 5 minutes, you're participating in the financial crypto ecosystem, regardless of who you are, where you're from. I could be in Somalia right now, getting shot up by pirates. You could send me fucking $50 in USDT to my Phantom wallet and I could buy a shitcoin. Now, if I wanted to be in the financial centralized ecosystem and now I was in Somalia, I couldn't do shit for the rest of my life ever. I'd be barred for anything and everything just by the color of my skin and the nation that I was born in. Bitcoin, crypto, DeFi has decentralized that. And the moment people realize it, which they slowly are, they're going to start pouring in. And they're going to pour into the path of least resistance. And this narrative, it's Solana.
That makes a lot of sense. Yeah, people always go for the path of least resistance. With that in mind, then, this is the juicy question that everybody wants to know. What is Luke Belmar buying for this bull run? What do you think is going to do 10, 20, 50, or 100x? Do you think it's going to be coins that allow people to onboard really easily, like Solana? What do you think is going to do the next 100x?
So first, what is Luke Belmar holding?
Right.
Right. So I think the most important position in my portfolio is Ethereum. The most important portfolio that I've built with regards to Ethereum is staked. So I'm a big proponent of staking in Ethereum.
Yeah.
So I think Ethereum is a $10,000 coin. Why? One very simple fact. When you have the Bitcoin ETF approval go well, and these greedy motherfucking bankers put their dirty little paws and sticky fingers on this Bitcoin ETF and realize how profitable it is, guess what token is up next?
Yeah, there.
It's
And
just a
and you
matter of
think
time.
ETH is going to pump harder than Bitcoin?
I mean, it's just inevitable simply by narrative and the fact that you can move the price a lot more.
Yeah.
So I will say why for that reason, the ETF. Two, for the simple fact that now you have all these other layer ones, a little bit nerdy, being built on top of the Ethereum virtual machine to make Ethereum compete, right, in some way, shape, or form with these other more centralized chains that are coming out. But by no means am I a maxi of Ethereum. If,
Sure.
if anything, I kind of hate it,
Me too.
but it doesn't mean I ain't gonna make money with it.
Yeah, no, I have the same opinion. I also don't like Ethereum. I think it's somewhat centralized. I don't like that all the stable coins are built on Ethereum, but I think it's going to pump harder than Bitcoin.
I mean, yes, but it's not just pumping, right? It's understanding what you hold and why you hold it. And I don't have many loyalties towards any tokens or any currencies. All you have to do is figure out where are the builders? Where are people building right now? Where are people transacting? Where's the attention? I said it before, I said in our first podcast, where attention goes, money flows. And whatever you put on the pedestal of narrative is what people are going to see. Whatever you see on CNBC, whatever you see on Fox News, whatever that is, the normies, they will head that way. But remember, during peak bull run degeneracy, you saw the most random shit on television.
Oh, yeah.
You saw NFTs that were selling for millions of dollars being talked about.
Doge.
You saw random shit coins being commercialized and announced and their charts being displayed. So Wall Street is run by a ton of idiots, to say the least, that produce no real tangible value in the world, yet they seem to have all the money. Why? Well, because they're crooks. So, under the premise that these guys are crooks, I begin to evaluate what is it that these guys do with these financial instruments? Do they hold biases towards them? Or do they treat them like prostitutes? They use them and then they discard them. That's exactly what they do. So they're telling you to hodl, they're telling you diamond hands, but they're selling on you.
Yes, I know.
So why would I do what all these people are saying instead of doing what they are doing? So when on CNBC they're telling you to buy Dogecoin at 69 cents or at 40 cents or to buy Bitcoin at 65,000, or you have Kramer say, hey, Bitcoin is about to fucking skyrocket and then the next day it dips 10%.
Yeah.
This is all controlled narratives, all controlled manipulation. So I hold no bias towards any currency except the one that can maintain my purchasing power. And today just happens to be Bitcoin. And anything that will allow me to increase my Bitcoin stack while not exposing myself to absolute amount of shit coins and scams in the crypto space, I think is a worthy ideal. And Ethereum has now become monolithic of sorts. It's pretty well established and foundational. If you're playing with $10,000, yeah, you can be a degenerate. But when you have a multi eight-figure portfolio, you can't be out here just buying all sorts of garbage. So my Ethereum play is a very substantial play. And then there's two other narratives, like I mentioned, the Ethereum virtual machine and anything that is focused on high frequency trading.
Mm-hmm.
Anything that will give users the ability to buy $5 worth of orders, millions of them on command.
Yeah.
The reason bots, automations, and markets were a little bit weird on Ethereum was because of the gas fees. You couldn't really commercialize well. Solana, AVAX, and some of these L1s are completely eradicating that. And like we talked about, people don't care about centralized or decentralized finance. They care about making money. In the bull run, they want to get rich. Whatever path of least resistance where they feel like they can get rich is the one that they will utilize.
You said you think that Ethereum is a $10,000 coin. What do you think Bitcoin is? Where do you think Bitcoin's going to go from here?
Infinite. It's you can't calculate Bitcoin by dollars anymore. You can't. The dollar's not worth anything. Go, okay, perfect. You think you're rich? You're a millionaire? You have a liquid $1 million? Perfect. Go buy a house. Cash. Oh, you can't. You need a mortgage. Oh, you need a loan. Oh, you need debt. Oh, you're poor. Oh no, I don't. I'm not poor. I utilize debt to my advantage because. But most people don't. Most people utilize debt and they get fucked. So we're in for a fucking bull run. That's all I know. That's what I'm excited about. That's my mind is buzzing for
Yeah.
that.
So okay, so we have this bull run coming. What are you trying to do with your portfolio? Are you trying to play it safe and do like a nice 3, 5, 10x? What are you going for?
So I mentioned, I think about a year ago that my phases in crypto evolve as I spend more time in it. In 2017, 2016, 2017, when I was first being introduced to this kind of crypto space, I I was the guy on this side, the guy that was just buying the narrative news on Twitter and whatever was available on Instagram stories. That's what I was buying. The bull run right after, I began observing key opinion leaders and these Twitter accounts and GitHub accounts and Reddit accounts with 5, 10, 20,000 followers. But this bull run, I'm with the builders. I'm building products. I'm investing in companies. I'm seed funding companies. Uh, I'm really involved at the gem hunting level, which is more less technical and more fundamental long-term approach towards projects. At this point, crypto is seasoned enough for me to start collaborating with projects more closely. And that's kind of what my focus is going to be this bull run. It's more so meeting the founders that are good, that are going to be here for a really long time, figuring out who are the scammers of this bull run and
Mm-hmm.
calling them out before they fuck all of us. I think that that's something we have to collectively do. I think there are too many red flags with Anchor Protocol and Luna to not say anything. And I made a couple $1 million shorting that. But if I would have used my platform that I have today to say certain things, then maybe people would have lost as much money. So I think building is my focus this run more so than profits. I made a great amount of money, but I think at this point it's building things that empower the ecosystem. I'm working on a couple open source projects that are going to be free projects for the internet to make Bitcoin better and make the crypto space better. So they're open source projects that people can have. I have a couple premium products and I have a couple crypto projects that I've been collaborating with, but it's a little bit of a different approach now that I am not seeing myself as much of a trader and more so a value investor and a gem hunter of sorts.
How do you hunt the gems? I know that you said obviously you got to look at what's most convenient, what allows mass adoption, what allows the path of least resistance. But is there anything else, like when you're talking to these founders, what are you looking for? What are you wanting to hear? So you think, yeah, I want to put my money with you.
So you need to know, first of all, do these founders have legs? What do I mean by legs? Good luck trying to found a crypto project or get started in crypto and not getting absolutely fucking grilled and destroyed.
Yeah.
So you want to have thick skin. So you're betting on people. You don't want to be betting on certain individuals that have no ability to run projects. One thing is to have a project and start a project and have a novel idea. Another thing is to be a business owner and have the balls and wherewithal to withstand a bear market. So the first thing that I look at is the individual. That's where you need to start when you're investing because you're investing into people. The second thing I invest into is not just the specific company or project. I invest in the narrative. So I need to do my due diligence and my research as to what are the narratives of the future. What is coming? I said it a couple of years ago when I was sitting down with one of the prolific OpenAI founders. He told me, start an AI proof company. He didn't tell me start an AI company, which is what all these dumb fucks did. He said, start an AI proof company because it's a lot easier than going and doing AI. You don't do AI. Do it, make an AI proof company. So I went and built Capital Club, which is AI proof. Why? Under the simple premise of understanding the future. So, narratives. Often, right after narratives, you have microcycles of trends. So you have narratives, macro cycles, and you have microcycles, trends. So what are you investing on at the trend level? Maybe this is worth like one bull run, couple months. Like you see Uniswap, for example. Uniswap in 2019 was absolutely ballistic. It was a trend. It was part of a bigger narrative, which is DeFi, but it had its moment. So you need to figure out the lifespan of these crypto projects, which tends to be short for most of them,
Yeah.
and then understand the narrative so that you can rotate your liquidity through the narrative, but inside different trends.
So let's talk about navigating this bull run, right? So once people have found, where the trend is, what the coin is, how do they know when to sell? You sold Bitcoin, you said around 40 to $50,000. That's amazing. That's near the top of the market. That's incredible. So how would you tell somebody, how would you explain this is how you need to sell? This is how you know at what point in the market you need to sell?
The number one rule of investing is always know your exit plan. You always need to know when you're going to get out.
Yeah.
So I had a plan of when I was going to get out. I thought Bitcoin was going to go to 87,000.
Okay.
That's what I thought Bitcoin was going to go to. But I wasn't going to sell at 87,000 because if I thought 87,000, then everybody thought 87,000.
Yeah.
So if you have to front run people on buy orders to get the bottom of the market, you have to front run people on sales, which means that sometimes you can't sell the top and sometimes you can't buy the bottom. So I'm okay not buying the top. But if you have a $30 million bag and that shit swings 10%, that's $3 million. So am I going to wait for it to go up 10%? Or am I going to wait for it to go down 10%? Which one's going to hurt me more? Making $3 extra million or losing $3 million, which is a couple years of work? Losing $3 million. So the moment the losing at a ratio was something that I couldn't really stomach, I was out.
That's amazing. That's something me and my brother were talking about the other day because we're holding. I feel like every time we have this conversation, I have to tell you, me and my brother are holding a shit coin, and we're like, should we get in or out? And no, we decided to sell actually because we had that same mindset. We thought we couldn't stomach the drop, so let's just take the bag. The coin ended up pumping. Actually, it did a 2x, but we don't care.
But the thing is, you do care because you mentioned it, and that's okay.
Exactly, but
It's okay. It's not.
you know what I mean?
I know what you mean, and
it's
this is the second point.
Yeah.
You never look at what you don't get.
Right.
So it's like walking into a pastry shop, getting two croissants, about to walk out, and then lusting at the fact that you didn't get every other dessert. You're not going to catch everything. You're not going to. So once you exit your position, I don't look at that shit. I'm done. I'm
No.
done. Because then you get FOMO and then you buy back, and then that's when you get dumped.
No, we're not buying back. But I know I tend to remove the tickers
ticker
from my
from
phone.
your-
Yeah. I've removed so many tickers. Okay, so I want to understand. People do get, emotionally attached to their coins. They get caught up in the hype. You mentioned the term super cycle, and I respect that and I understand why you mentioned that, but I also feel like the term super cycle is kind of a dangerous term because it makes people hold on forever. So how would you tell people, how would you explain, how do you, I guess, listen to your gut and stop following all the hype and
It's a crypto market super cycle. It's not a cryptocurrency shitcoin. You can hold some bullshit meme
Yeah,
coin super cycle.
right.
The cycle is in the innovation and the development of technology. And if some maxi out there doesn't like the word that I use super cycle, they can kiss my ass because it is a super cycle I've been fucking waiting for 8 years. So it is here. But it's a cycle of innovation and adoption. It's not a cycle of, oh, am I going to hold this fucking Dogecoin from 69 cents, which is a 50 plus $1 billion market cap, all the way to $3 to $5. It's not going to happen. It's a shit coin. It has no intrinsic value. It has no worth. It doesn't store energy like Bitcoin does. It does nothing. So if people hold their bags in shit coins, perfect. They deserve to hold their bags in shit coins.
Mm-hmm.
If they buy something and they don't sell it and the price goes down, you deserve the price to go down because you didn't sell.
Yeah.
Just like any other thing. You can buy this house, it will either appreciate or depreciate. You can buy a pair of shoes, it'll be appreciate or depreciate. The question is, are you willing to actually buy it at that price and hold it? And is it worth what you're buying it at? So for example, I have a lot of projects that approach me in crypto for private rounds and things like that. And I always welcome them, but sometimes I get these ridiculous multi-billion-dollar valuations when they don't even have a project, they don't even have a token, they don't have anything. That's a shitcoin. That's a shitcoin. What? How can you justify and validate $1 billion of valuation? You can't. So what happens when you have overinflated $1 billion of valuation? Eventually that valuation depletes and you're left holding the bag. I will not be left holding the bag. I prefer making the money based off of the goals that I have, and then I get out. But I don't know where Bitcoin peaks at this cycle. I really don't, because nothing like it has ever happened before. You had bad crypto actors wiped out. You had banks wiped out, which introduced trillions of dollars of currency being printed. You had the top stocks already pump, which means they're not as enticing to get into. You had a rotation into crypto. You have the Bitcoin ETF. You have the Bitcoin halving. You have now DeFi adoption right around the corner. What else do you want? Like what other green signals, what other green lights do you want to get involved in an emerging market? There is nothing to fear when it comes to the crypto space if you're here to build and if you're here to innovate and if you actually believe in it. If you're just in it for a quick bag, I've seen so many people in all these bull runs that I've done. I did the 2017 bull run with a ton of people.
Mm-hmm.
None of them are here.
Mm-hmm.
None.
Yeah.
None. The guy that got me into crypto today owns no crypto. The guys that I did the bull run in 2020 with, besides 7 gem hunters that I now moved over to 2024 bull run, they're not here. Most of them don't even own crypto. It's fucking crazy. So this cycle, it'll happen again.
Mm.
The question is, am I going to be an individual that sells his bags and quits and goes and does something else? Or am I going to continue accumulating and buying into this internet ecosystem that is literally flourishing day by day?
That leads me to my next point, which is you have this philosophy about money where there are 3 stages. It's earning, then you have to multiply it, then you have to preserve it. And it's interesting that you say the guy that got you into crypto now isn't here anymore. And I also hear about that all the time, but not just not being in crypto, but the money that they made is gone. I know a guy, he's 16, he made 10, I think about 10 million on NFTs in the last bull run. He came out with $10,000 in the end. So how can people not just, catch the pump, but how do they multiply it and then preserve that capital at the end and actually come out with something?
I tell people that making money is a skill.
Yeah.
If you don't make money, it's because you haven't learned the skill of making money. Just like making a sales call, just like putting forth a marketing campaign. These are skills that yield money, but the money making skill is also a skill. On the counter, keeping your money is also a skill.
Such a skill.
Budgeting, accounting, running your books. 1,500 years ago, when the Catholic Church owned the world and you had the Bible as the constitutional book of rules, the peasants didn't have access to it. They were illiterate. They were not taught to read in Latin. They were waiting for what? The priest to translate the complex linguistics into a way that the peasants could understand, and the peasants just waited. Today, it's the same thing, except it's called financial illiteracy. Finance is the language of the elite.
Yeah.
Tax code for a reason, is the language of the elite. The reason they make it complicated and confusing is so that you end up being in a situation where you are demoralized from what? Creating wealth. But inside of the rules, which are convoluted on purpose, there's also opportunity. And what I've come to realize is that creating money, multiplying money, and preserving money requires 3 different mindsets. Anybody can create money. What I mean by creating money, I don't mean going to the Federal Reserve and minting money. Creating money, right, is the ability to turn something like your energy of labor, working and transmuting that energy into dollars. So you're creating dollars. Now the question is, do you always want to be expending your physical energy for the creation of dollars? No. Why? Because you're exchanging something that is finite for something that is infinite. Very stupid trade-off. Very stupid trade-off. So the question is, how quickly can you get out of that trade-off? And the bots get angry when I talk about The fact that you do not want to get paid shit money for your time.
Mm-hmm.
Oh, well, my time. Idiot. You only have X amount of time, finite hours of your life, and you're expending it for money that is getting printed out of thin air. $6 trillion were printed over the last 10 years. Do you know how many hours of labor that is at a minimum wage? You're looking at hundreds of thousands of hours of human capital that were printed out of thin air. Where's that labor? Who's accounting for that labor? Nobody. Therefore, the currency is worthless. It has no value. So yes, you can create money fast, expend the least amount of energy possible to make money, then you multiply it. Multiply it through what? Investment vehicles, business, the stock market, real estate. Vehicles that do two things, either beat inflation or keep up with inflation. So you need to find what those vehicles are. I don't want to say what these vehicles are because there's so many of them and they change over time.
Yeah.
Finally, you have the preservation of wealth, keeping your money. There's two ingredients, in my opinion, in order to achieve this financial literacy that allows you to keep your money. The first one is you need a financial advisor or a financial planner. You need somebody that, one, understands your risk tolerance, that matches your risk tolerance. Two, that can see into the future, or understands how to balance a book, or understands, how much money you can actually spend or what you can invest, and whose job is to care after your money, your financial advisor. Just like you have a doctor that gives you advice if you're not feeling good or if you want to optimize your body, just like you would have a fitness coach help you develop a really good physique, you need a financial advisor and a financial planner that can help you set yourself up really, really well. The second is you need a financial role model. You need an individual that you can look up to. What is your beacon of possibility? So I have my role models, my financial role models, and these role models have different investment theses, different investment vehicles, but they have formulas. And if you can match three things, intensity of effort, repetition, and I would probably say quality of effort, you can potentially achieve a similar result to that of the individuals that you're trying to replicate. So for example, Warren Buffett. Warren Buffett has his investment thesis. One of his investment thesis is if you are ultra diversified, you're ignorant.
Right.
Because you have a shotgun type approach. So I see some of these crypto portfolios holding 50 coins. That's a shotgun approach, which is what? It's so open that if one of these becomes a great opportunity, you can't maximize it fully. Simultaneously, on the other side, he's also countering his own thesis by saying, never jump into a pond with both feet. So somewhere in the middle is his investment thesis. This is financial role modeling. And you need to find those individuals that you resonate with, and it's different for everybody based off of what they want, and identify these financial role models, figure out what are the recipes that they use to create, multiply, and preserve wealth. And if you follow these things with the right amount of energy input, with the right amount of dedication, with the right amount of consistency, and with the right amount of effort, you do what? Replicate the result. Just like a list of ingredients. If I give you, right now we go to the kitchen, I give you the list of ingredients, I could give you different eggs, different milk, different flour, but I gave you the same ingredient list and I had different ingredients, we would come up with a very similar product. It's the same thing with finances. It's the same thing with money. It's the same thing with financial literacy, and it's the same thing with becoming rich. There's formulas, there's secrets, there's advice, but you have to find it and then you have to adapt it to yourself. So if you want to achieve mastery level financial literacy in order to preserve money, financial advisor, financial planner, and have a financial role model that can give you an understanding as to what the limits are.
So just finally, a really interesting thing that you always talk about is data sets. So talk to me about this, and what are some of the more interesting data sets that you've been learning and talking about more recently?
You're doing good compared to who?
Is that a question or a statement, Luke?
That's the data set.
That's the data set. So what is it like, not comparing
No,
yourself
you're
to
doing
others?
good. You're doing good in
Uh-huh.
life compared to who?
Compared to someone not doing as good as me.
Perfect. Then compare yourself to a higher standard and you'll keep pushing. That's what I've been learning. Anytime I feel like I'm absolutely crushing the game, I just have to evaluate compared to who.
Mm-hmm.
Keeps me grinding. That's the data set.
I'll take that on board. I appreciate that.
It wasn't for you. It was
No, it's
it's
good.
a
That's
sentence
how
that
I
I've
am.
been quoting that sentence.
That's what I've been thinking recently. I always think I'm crushing it, but then I put myself in an environment where I'm
And
the,
it's not even,
the
you know what,
lowest in the
and
group.
you know what it is? It's not even comparison. It goes back to what I mentioned before. It's role modeling.
Mm,
It's identifying what is the potential availability. So if you think you're crushing, if you think your bull run's going well, if you think your portfolio's crushing, if you think your business is doing great, if you think your physique's at the next level, compared to who?
mm. Keep leveling up.
Always.
How can people get in touch with you, follow you,
You'll
be a
see
part of everything you're doing?
you'll see me on the internet.
See you on the internet.
Yes.
Perfect. Thank you so much for coming on. It's
Thanks
been
for having
so
me.
great chatting with you. Really appreciate all your insight, especially about the ETF, because that's coming. And
I'll see you at the Bitcoin halving.
I'll see you on the other side of the harvest.
Let's do it.
Thanks for coming on. Guys, if you enjoyed the show, please don't forget to hit the like button and also subscribe because we're going to be doing a lot more of this crypto content. We'll see you next week.